You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 2/16/2021. Well, supposedly we are seeing now the silver squeeze, hashtag silver squeeze, if you will. Is that a fact? Is it really about to happen? Are we finally going to live through the inevitable? I'm not so sure, but eventually, yes. And the person you're about to hear from agrees. But in the meantime, what's your take on the silver squeeze? Why don't you write me an email and let me know your thoughts, kl@kerrylutz.com. Right now, our good friend Jordan Roy Byrne is with us. You know him well from thedailygold.com. Jordan, welcome back. Great to have you.
Hey, Kerry. Thanks so much for having me on.
As always. So the silver squeeze, maybe there's more to it than meets the eye. Maybe it's really underway. And the moment that you and I have been waiting for a long time is finally almost upon us.
Yeah, I think it depends on your time frame. And I mean, you know me, I like to focus on what's happening in the market and the market action. And of course, a lot of people will say, well, this is manipulated. I mean, it's a fake market. I mean, I've been hearing that for 15 years, Kerry, and you really need to get down and focus on, what's objective, what are facts. And silver, I mean, it did have a pop, but it quickly reversed. And what's interesting to me is it's kind of gained a little more strength since that big reversal. However, the silver stocks are lagging. So since we had that big one-day sell-off, silver has recovered a little bit, but the stocks have been lagging. So that's kind of, I think the action in the stocks, I mean, there's a lot of cross currents right now in all these different markets. It's a very interesting period, but the action in the silver stocks tells me that we're not about to see, silver trade above $30 and make some huge move. I mean, I'm extremely bullish on precious metals over the next couple of years. So I wouldn't tell, I mean, this is it, a lot of it is kind of noise. I mean, because I'm a buy and holder, trim, take some profits along the way. So, I mean, if silver goes down some more from here, it goes through $30, it really shouldn't matter to you because you should, at least me, I mean, I think you should be in for the next couple of years in the move to $50 and possibly higher than that.
Yeah. So the big move, which psychologically will be $30 or higher even, that's still a little bit a ways off, huh?
Yeah, I mean, that's how I see it. And again, like I said, I mean, there's a lot of interesting cross currents here. And, I like to look at history. And if you look at the bull market of the 2000s, I mean, if you look at gold right now, it's pretty clear it's been correcting and consolidating. Same thing for the gold stocks. But silver has performed better. And a function of that is due to higher inflation expectations. I like to say silver, it tends to follow about 50% of what gold does. And then the other 50% is inflation expectations. So that's been keeping silver holding up better than gold during this period, the last several months. And if you look in the mid 2000s, there were some points in there where we had corrections and consolidations in precious metals where silver actually held up better than gold during those periods. So to me, that's why it has held up. I mean, the silver squeeze, I mean, look, the futures market, I know there's an extreme amount of leverage in there, but it's much easier to squeeze a stock than it is an entire commodity in the futures market. Like, I mean, this is a whole nother deal if you're trying to do that. So again, my view right now is I don't think it's about to break above $30. But look, I mean, you make the big money by buying and holding and riding trends. And the primary trend for precious metals, even though we have corrected, it's higher. I mean, the big move is still ahead of us. And I don't think it's going to take like 5 years or 3 years. I think it's, it could be 2 years or so, maybe a little more than that, maybe a little longer. But that and I don't mean to ramble on, but that is how the big money is going to be made. I know that it's interesting to talk about the silver squeeze and all of that, and I mean, it gets people excited, but focus on the bigger picture. We're in a primary uptrend. The fundamentals are there. We had a huge move in the sector. We just have to correct. It's going to take a little more time, but you want to be a holder here, a buy and holder, because I think you're going to be really happy a couple years from now.
Yeah, I'm inclined to agree with you. It's kind of what I've been sitting around waiting for, not sitting, but you know what I'm saying, waiting for. There's a certain inevitability to it, if you will. And I think that you're right. We're just getting underway here. The fun is just starting. One thing I wanted to talk to you about is platinum. Now, today, platinum is approaching 1,300. It blew past 1,000, then it pulled back, which is exactly what you want to see in these types of movements. Then it broke 1,000, then it broke 1,100, then it broke 1,200. What's the trend there?
Oh, the trend looks beautiful. And I'll say I'm not an expert in platinum like I am in gold or silver, or at least I'm more, that I use that term loosely, but I'm more knowledgeable about precious, I should say gold and silver than platinum, because platinum is considered a precious metal. But yeah, what a move in platinum this month. I mean, platinum is probably, I'd have to look at some ratio charts, but platinum and silver have probably been the cheapest metals, I would think. And looking at platinum, I think it does have some resistance around, it looks like 1,400 or so, maybe 1,500. So I think this huge move we've seen this month, I think it has a little more to go. And I mean, copper has also made just a huge move. But platinum has been more long-term oversold and more of a value when you compare it to other assets and markets. So, I mean, congrats to the platinum bulls who really held in there for several years. I mean, that thing has really moved the last 3 or 4 months.
Yeah, it's been pretty good. But, talk about precious metals all the time, Jordan, but compared to cryptos, they really have hardly budged.
Yeah, I mean, crypto, I look at crypto because I get the question a lot, and I'm sure you do, is speculation in crypto going to hurt precious metals? And I'm not worried about it, because I look at the points where crypto has done really well and gold hasn't. I mean, there was part of 2017 when crypto went parabolic, or Bitcoin went parabolic. Gold's fundamentals were not that bullish at that point in time. You didn't have falling real interest rates. Now, I get it. Gold has corrected over the last 6 months when interest rates have actually declined. So real interest rates have actually declined. So that is one, legitimate concern people could say. But my counter to that, Kerry, is gold made a huge move. I mean, if you look at the gold chart 6 months ago, it went from $1,200 up to 2,100 in a little more than a year. I mean, that is a huge move for gold. We have not seen moves like that in a while. And you look at we had the COVID crash, the gold stocks. I mean, just a spectacular move in only 4 months. I mean, the recovery from October 2008 was spectacular as well, but sorry about that. But this one has been it was even more spectacular. So the point I'm making here is markets have to correct at some point. They have to correct and consolidate the gains. They can't go up forever. And so I know that it looks like gold and gold stocks should be doing better here, and that crypto is kind of stealing their thunder. But I don't see it that way, because technically, they were at a point where they had to correct, and they were going to have a sustained correction. And that's what we're seeing. And you go back and you look at the early to mid 2000s. I mean, there were periods in there where gold and gold stocks consolidated for 12 months. I mean, we're 6 months into this. So I'm not saying it's going to last another 6 months, but this is how these markets work. And so I'm not that concerned about crypto stealing the thunder of precious metals. And crypto is going parabolic, and at some point it'll hit a peak and have another huge correction. And who knows? I mean, that could coincide with precious metals starting to turn up again and challenging the highs that they made last year. So I'm just not, I mean, if you look at how crypto trades, it's kind of like half a currency and half a tech stock. So it's a different thing.
Yeah, for sure. And we don't have like a lot of history on it. It's only about 12 years old. and we just really don't know how it's going to react under certain conditions. And India just banned it. You could see other countries banning it. You could see countries banding together to ban cryptos. And that would not surprise me in the least, especially if they're going to release their own crypto onto the market.
That's a fantastic point. And I'm not about the history, I would say, because you know that I love to go back and look at history and kind of compare the present to the past, not just in gold and silver, but all markets. And so crypto doesn't have that history. And so and what you're saying about the regulation, Kerry, I mean, that's another excellent point. I just, I would look at crypto as like insurance or a lottery ticket. Now, I mean, if you don't know what you're doing and you want to get involved in it, just look at it like a form of insurance or a lottery ticket. So I'm sure blockchain technology will be around in the years and decades ahead. But who knows? It could be in some kind of different form. It could be heavily regulated, like you said. So, I'm not trying to persuade people not to invest in it. That's just my view. It's kind of it looks to me like it's viable as an investment, as a form of insurance or a lottery ticket. And you have to be really careful and know what you're doing.
Yeah, I'll agree with you there. And so what about the mining stocks? So they have been holding their own. They're down a bit. I know TSX Venture, it's all been inflated by cannabis, by cryptos, by mushroom stocks. I mean, you name it. Everything but gold has been driving it up.
Yeah, I mean, looking at the mining stocks, I like to look at the ETFs. And I put out an article, I think at the end of last week or a week ago, where I felt that they had hit a bottom. And I went and I looked a couple years back, and so, typically bottoms occur really quickly, but, sometimes it may take a few weeks as you get kind of a retest. And so those signals, those technical signals that tell you a bottom is likely. And sometimes, again, it'll take the market a couple more days or perhaps a couple more weeks to kind of confirm that bottom. So that's one thing that could be happening here in the mining stocks. I also, they, in terms of breadth, they got really oversold. I like to use various breadth indicators. Sentiment has come down quite a bit. I mean, if you look at GDX came down to 33, and I mean, there's rock solid support at 31. There's a lot of other things that show support at 32. GDXJ came back to 47.48, which is the 8-year base. It was the former resistance going back to 2013. GDXJ broke above that. Now it came back, retested it a couple times, trading, last Friday closed at 50. So I don't think I don't think mining stocks are about to blast off here, Kerry, just because capital has been flowing into other areas. And I think that's going to continue to some degree before it fades. But that being said, I don't think there's enough sellers left to push mining stocks that much lower. So you have to be, I would say, in an accumulation mode. Sometimes the markets can bottom or they can be really cheap, and you want to buy even if you're not sure that they're going to blast off over the next month or two. So that's kind of how I look at things right now. I mean, this is a time to be buying. But I mean, for me, I think the next big move in the sector is more likely to come end of this year, or maybe next year, than in the next couple months.
All right. Hey, well, so we're getting to that dangerous time again of March. We had that huge crash last year. Is it possible we're going to get another crash?
Don't just survive, thrive. The Financial Survival Network.
Today's show is brought to you by Mustango River Resources. Their flagship projects are located in Kirkland Lake, an established gold camp that has historically produced over 70 million ounces of gold. The Kirkland West project is a high-grade gold project beside Kirkland Lake Gold's world-class Mikasa gold mine, one of the highest-grade mines in the world. The Umeja project is an advanced stage project with 600,000 plus ounces of gold along the Cadillac Break, 25 kilometers east of Mikasa. Their projects have the potential to transform into another world-class mining camp in the Kirkland Lake District. Make sure you go over to Mustango.com. That's Mistango.com. Take a look and sign up for notifications. Stock is traded on the Canadian Stock Exchange, ticker symbol MIS. For more information and to sign up for notifications, go to Mustango.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
I'm actually writing an article about this, something I'm probably going to post in a couple hours. And, to me, like, I know that a lot of people are talking about this because I've gotten emails from my followers about it. And I just don't, I'll try and condense a really long answer to a minute or two. But crashes are pretty infrequent. So it's really rare that you would have a crash one year and then a crash the next year. And to get the COVID crash was a real black swan, but the markets have completely recovered. But if you look at the 1929, 1937, 2007, the three biggest crashes in bear markets, you had problems in the banking system. You had the Fed was tightening, and up to those peaks. And those peaks were also followed. They were preceded by an economic expansion. So nothing tells us that we're going to see a crash like that. In addition, if you look at the next two worst crashes in bear markets, you had the tech bust in the early 2000s. There are some similarities today to that. And then you had the 73 to 74 crash in bear market, which was highly inflationary. And that expansion was only 3 years. So I think the next downturn bear market could be something like that, after an expansion that doesn't last too long. So I look at where we are here and now, Kerry. The Fed is not tightening. They're accommodative. The government is about to give out free money to people. The economic expansion, the economy is probably turning up from a recession. So none of these things tell you we're going to have a huge crash. Now, if you look at valuations, they're off the charts. There's speculation in tech, speculation everywhere. I think those things would tell you that it's very possible we could have a 15 or 20% correction. I call it a sharp correction at some point this year. So that's kind of how I see it. I just don't, you look at where the markets and the economy and the financial sector, when you look at how they look when markets crash, we don't see that here and now. But, that doesn't mean we're not going to have a serious bear market at some point in the next 3 to 5 years, because we will. And if you look at the overvaluation, if you look at expected returns over the next 10 years, they're going to be nothing. Even the perma bull Wall Street types are saying, well, you're only going to get 2% a year for the next 10 years. And you throw in some inflation with that, then you have the mid 60s to the 70s all over again, which was a volatile period. It was very horrible. In real terms, bonds and stocks did horribly. You had to be in hard assets and precious metals. So I think we're going into some period like that. But just circling back, I just don't see the ingredients here for a crash this year. But I do think a bear market, or not a bear market, I do think a sharp correction is definitely possible, something we have to be aware of. And the last point on this, Kerry, over the last 6 months, gold and gold stocks have gone down. They've corrected. So people should not be worried that there's going to be this massive bust and then gold and gold stocks are going to get hit massively. They might get hit a little bit, but all the hot money in the last 6 months, it's gone into everything but precious metals and bonds. So precious metals are in a good position to actually benefit if we do get 15 or 20% correction.
And let's not forget last year in March, when the market crash came, obviously gold stocks, mining stocks were hit, but they came back way, way faster than they did in 08 and 09. 08 and 09, it was a matter of months. In this case, it was a matter of weeks.
Yeah, that's a fantastic point. They came back so fast, and I think now predicting corrections it's really hard, but I think if we do get some kind of correction in the stock market of 15 or 20%, I think you'll see gold is going to hold up extremely well. It's not going to get hit. Maybe gold stocks will go down a little bit, but once we get past the first half of that correction, I would wager that capital would start flowing into precious metals, and they would start doing really well and turning up towards their highs. So I'm in fact, Kerry, we may actually need something like that to happen for precious metals to really sustain a rebound and make that next breakout.
All right, I think we will leave it at that. So the name of the site is thedailygold.com, and just go there. Any particular thing you suggest people take a look at when they go?
You can opt in there at the top and get a free copy of my book, and you can get on my email list. And every week I send a free email update, and you can get all the free work, videos, articles, interviews like this. And in addition to that, I do give some snippets from my premium service in those free emails.
All right. Hey, well, it's really great to talk to you. And I'm really looking forward to what's coming next in certain ways, in other ways, kind of fearing it. But help yourself prepare. Go to thedailygold.com and check out Jordan's latest work. I got into following Jordan from his numerous articles on kitco.com, and I really think he's got one of the best insights and sites on precious metals investing and mining stocks. With that, we'll let you go, Jordan. Any questions or comments? Email is kl@kerrylutz.com. We answer all. Twitter feeds at Kerry Lutz, Facebook page, Financial Survival Network. Of course, our website, financialsurvivalnetwork.com. Sign up for a free newsletter. Jordan, always a pleasure. Thanks so much.
Hey, thanks so much for having me, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.